Hello and welcome to Enrich Academy. Today let's discuss about piercing line candlestick patterns and dark cloud candlestick pattern. Both these candlestick patterns are quite important and are pretty good for the Indian stocks and also for stocks which have a gap up or gap down opening. So let's go ahead and check out how to identify these patterns on a chart. The piercing pattern is seen as a bullish candlestick reversal pattern, and it is quite similar to the bullish engulfing pattern. There are two parts in a piercing pattern. We can see a bearish candle on day 1 and a bullish candle on day 2. The piercing pattern occurs when a bullish candle on day 2 closes above the middle of day 1's bearish candle. The price gaps down on day 2 and closes into the losses made on day 1's bearish candle. So the buyers have confidently closed above the midpoint of the bearish candle. So you can see that the closing happens at the midpoint of the bearish candle. So basically the bulls win the battle, closing in the upper half of the bearish red candle. The rejection of gap down by the bulls typically can be viewed or seen as a bullish sign, and the fact that the bulls were able to press further up into the losses of the previous day shows us a bullish sentiment. Bulls were quite successful in holding the prices higher with less supply and increasing level of demand. So basically the first candle should form during a downtrend, and the body of this candle is usually a little big because the market is quite bearish here, and we can see that there are sellers still pushing in the market. And you can also see there's a gap down opening here, and the second candle, which is bullish, is formed next to the bearish candle. Generally, other technical indicators are used to confirm a buy signal given by the piercing pattern, like a downtrend trendline break. Now, since the piercing pattern means that the bulls or the buyers were unable to completely reverse the losses of day 1, more bullish movement might be expected before an outright potential buy signal is given. Now, the bullish engulfing pattern is typically seen as being more bullish than the piercing pattern because it completely reverses the losses of day 1 and creates a bullish reversal. If you have missed the engulfing patterns, do watch it. The link is provided in the description box below. Now let's look at the dark cloud cover pattern. The dark cloud cover is a bearish candlestick reversal pattern similar to the bearish engulfing pattern. Now there are two parts in this formation. A bullish candle is seen on day 1 and a bearish candle is seen on day 2. A dark cloud cover pattern occurs when a bearish candle on day 2 closes below the middle of day 1's candle. We can also see a price gap up on day 2, which closes into the gains made on day 1's bullish candlestick. Now, the rejection of gap up is a bearish sign in itself, which shows more bearish sentiment. The bulls are unable to hold the prices higher, and we can clearly see that the demand is less compared to the increasing supply. This pattern is opposite of the piercing candlestick pattern. The first candle is a bullish candle, as you can see, and the price opens up here. The buyers have pushed it all the way up over here and closes here. You can see a bearish red candle next to it. Now this means the sellers have come in and have pushed the prices all the way down. So in the dark cloud cover pattern, the second bearish candle closes below the midpoint of the first bullish candle. Now the way to spot it is if the second candle closes below the 50% body of the first candle. It might look similar to the engulfing pattern, but train your eyes to spot the difference. Engulfing pattern will close below the open of the first candle, covering the first candle completely. So this pattern is a bearish reversal indicator and shows us that the bears or sellers are in control here. So we can say that the market has rejected this gap up opening. Or we can also say the market has not accepted it, and we can see that many are selling and exiting the market, creating a bearish trend reversal. Now if you see a third bearish candle, it's a good confirmation here, but it's not necessary that you may find one. Now traders typically suggest to not sell exactly when you see the dark cloud cover pattern on day 1 and 2 until you have other confirming signals such as a break of an upward trend line or other technical indicators. Now one reason for waiting for confirmation is that dark cloud cover pattern is a bearish pattern, but not as bearish as a bearish engulfing pattern, which can be seen as a more bearish formation. as it totally rejects the gains of day 1 and typically closes below the lows of day 1. So I hope that you now have a fair idea of how to identify a piercing candlestick pattern and a dark cloud cover pattern on a chart. If you found this video useful, please do like and share, and do subscribe for regular updates. Thank you.